Mixing ICT and price action. Now for the haters, this video is made live and it's kind of long, so stay to the end to watch how I made those profits. So let's get into analyzing. The price, as we can see, is deeply inside the daily order block in a way that if we pull out the retracement, the Fibonacci retracement, we will find out that price is on the mean threshold, which is the midway in to the daily order block, the long daily order block, which means now price has to somewhat retrace. And you can see how price formed a lot of wicks around there, showing that it cannot break above that zone. Now on the 4-hour, we have a market structure that we're going to be dealing with which is inside there. Price was breaking highs and breaking lows. You can see it first broke, it wiped that high, and then it went to wipe the low, and on that high it was wiped before price moved to its current stage or state. So now the range that we're going to be dealing with is between that low and that high. We can see and we can denote the liquidity pools below the lows and above the high. Above the high, there is a buy side liquidity, and we're getting into it. Above there's a buy side liquidity, and below the low there's a sell side liquidity. So market can choose which side it's going to hit first. And inside the range, we can see price has currently hit the 4-hour rejection block, so it's likely going to shoot down into the sell side liquidity. So between both the pool of liquidity, it might likely reach for the sell side liquidity. Now on the 1 hour, we can see the 4-hour is in line with the 1 hour order block, the hourly order block. So price keeps on telling us that it's going to shoot down. And we can also denote another pool of liquidity or below that low, which is the sell side liquidity. So price can also reach for that. Price will also reach for that sell side liquidity if it goes down. So now what we have to look into is what's below that internal sell side liquidity is that 4-hour bullish rejection block. So if it reaches for that internal sell side liquidity, it's going to hit the 4-hour bullish order block and then retrace back to an order block, and then it might reach for that outside pool of sell side liquidity. So this is our analysis using ICT or smart money concept. Now when we use it in line with price action, we will see that it formed a chart pattern, which is the head, the left shoulder, the right shoulder, and the neckline. Now this is similar to the famous head and shoulder chart pattern. These are the examples. So now price, what is going to do is to break out below the neckline, retrace back into the neckline, and then continue.
A few moments later.
It's been a few moments later, and now we have come back to see what price did where we left it. So we left price shooting down, and then price did exactly what we said. It shot down to the sell side liquidity and it hit the 4-hour bullish rejection block. After that, it shot back into that zone, that blue zone that we marked out, and it mingled inside the zone up until a moment where it shot down to reach for that other sell side liquidity. So yes, price respected both price action and ICT. But now on the trade, on how we caught the trade, you see that 1 hour order block where price hit and then collected liquidity, and then it shot down from that 1 hour order block. That's where I sent the sell signal on my Telegram channel. Now, this is the video of me entering the sell positions, and as you can see, I was entering 0.05 lot on an 80 something USD account, and I think I entered about close to 5 or 6 of those positions that I placed, and I placed it at market execution. And obviously now that you've seen, you know the results. So yeah, afterwards, these what happened. It shot down and we managed to go from 86 to over 200 USD.